Hello, Knoxville. Welcome to the Organized Investor Show, brought to you by Tennessee Wealth Management. There's 4 of us in the studio, and our goal is to help you organize 3 things: your investments, your retirement, and your affairs. And financial affairs. This isn't daytime TV. My beautiful wife, Susan, she came up with how to refer to ourselves moving forward. East Tennessee's Financial 4, giving you your forecast. Way too much fun with the number 4 around here. I'm Ainge. You can hear me on the Erik Ainge Show, 99.1, The Sports Animal, where we help you organize your sports brain. But right here, it's me with the team at Tennessee Wealth Management. That includes, drumroll please, thank you, Megan Hubbard, starting at Master's Degree of Curriculum and Instruction, for former first grade teacher at CAK, works right there at Tennessee Wealth Management. We also have, drumroll please, starting is Susan Ainge, and you may have guessed she happens to be my beautiful wife, and she's getting smarter by the day, studying her Series 7 securities exam. Whoa. And finally, drumroll please, last but not least, starting at guard, number 23. No, not Michael Jordan. Jerry Goodman, Megan's dad. He was CFP, 43 years of experience, formerly was a VP at Merrill Lynch. That's us. We're here. Let's roll.
Thank you, Eric. That was actually the best intro you've ever done this week.
No, thanks.
So as our fearless leader just announced, we are here to help you organize your investments, your retirement, and your affairs. And let's start off with your investments, since it's only one of the 3 with the potential to materially improve your long-term financial future. I would say it's probably maybe the most important.
And so just what do we mean by that? Well, if your portfolio is worth, say, $1 million, if you can improve it by just 2% a year, well, that's an extra $20,000 per year. Folks, that's $400,000 over a 20-year period. Now, if you're wondering, well, have we been able to do that? How much have we been able to help our clients do that? Well, here's our track record, Fearless Leader.
During the first 9 months of 2025, the 210 accounts that they're managing over there at Tennessee Wealth Management, this is as of September 30th, 2025, had an average net rate return of 33.2%. That's 3.5 times more than the Dow Jones average. Over the past year, 29.8%. The Dow's, by reference, is 9.6. Over the last 3 years, net return, 22.3% annually. 5 years, 18.3% per year, more than 7 points higher than the Dow. And that 18.3% number is more than double what you're seeing in these mutual fund portfolios. 7 years, guys, the number is 17.1% annually.
A lot of numbers.
These are net returns after all fees and costs, and they're posted at theorganizedinvestor.com. Remember that past performance isn't guaranteed, and results vary based on each investor's goals and risk tolerance. To start off, Jared Hubbard and Jerry Goodman manage these accounts here locally, and the goal of 2% improvement comes from 3 things. First is lower advisory fees, because we are usually about 1/4% less. For $1 million portfolio, that's equivalent to $2,500 a year, or $50,000 over a 20-year period.
It's a lot of money.
Next is avoiding internal costs by not using mutual funds, ETFs, and other investments with hidden fees. And better performance by simply being more selective with the investment choices. So lower advisory fees and avoiding hidden costs are pretty obvious, but how to improve your actual performance is actually more involved. First, we don't use mutual funds or exchange-traded funds because owning 15 to 20 of those that may be invested in several hundred companies each means you own thousands of stocks.
And so we like to refer to that as diversification because you basically own virtually every stock on the planet. So you own some of the good ones, but you also own a lot of the not-so-good ones. So mathematically, your return ends up becoming a mediocre average of just everything. So you're suffering from what we also like to call diversified performance, and that's just really not good enough, is it?
No, it's not. And so instead, you guys are using individual common stocks because there's no hidden internal costs, and they're much more transparent, and you have better control over your taxes. A lot of good that comes from those common stocks, and it comes in 2 ways. First is the core holdings. This is how we're doing it, right? You have the core holdings with companies with a long history of raising their dividends. These are companies like Costco, which we have to go and return to do some receipt thing that Susan and Megan were talking about.
They don't cheat on it.
We got to go figure that out. Costco, Walmart, Home Depot, Lowe's, Smucker's Jelly. These are companies like Lowe's, for example, has raised their dividends consistently for over 60 straight years.
Hey, I got a question. Has anybody ever returned Smucker's Jelly? Why would you ever do that?
Well, it's gone. You can't return an empty jar.
Well, but if you didn't like it, though.
I don't think you can return it if it's open.
I mean, I
Jerry
guess you
might try.
could. He would try. feel like I didn't like this.
Sorry I interrupted.
Stay tuned.
I kept trying it to see if I liked it, but
Now it's gone.
I still didn't like it, so I'd like my money back. These types of companies, they are from the Wells Fargo Diversified Stock Income Plan. That is a mouthful, so we refer to it as the DSIP list for short, DSIP. And this list has a 30-year track record of over 12% per year. And there's more information about the DSIP list on our website, theorganizedinvestor.com. So if you want to go there, you can check that out. Because investors view these types of companies as being well managed, their price holds up better during market downturns. So these dividend growth stocks are our core holdings we use as our starting point, and this would be an excellent approach if we did nothing but invest in these types of stocks.
The second approach we refer to as bargain opportunities. So when the market overreacts, like during COVID in 2020, the banking crisis in 2023, or the tariff scare in the spring of 2025, we like to swoop in and buy a lot of quality companies when they're on sale.
On the cheap.
Exactly. So when you're stuck inside, say, a mutual fund or an exchange-traded fund, this bargain hunting situation gets a little trickier, okay? One part of the fund might barely budge, while another part takes a big nosedive. But you really can't swap one piece around for the other. You're basically riding whatever the fund manager has decided, and you're either going to buy more, sell some of it, or just sit on what you've got. So we play this game a little differently. We manage the accounts on the security level, not on the fund level. That means that opportunity shows up, we actually can make some moves on it. Funds and ETFs, they don't have that same kind of agility. So the most common thing investors always tell us is they don't like mutual funds and ETFs, period.
And that's why their core focus is dividend growth stocks from that DSIP list. Names that you love, again, like those Home Depots, Costco's, Walmarts, and sure, they dip sometimes, but not nearly as much as airlines or cruise lines did back in 2020 or in the spring of 25. They made 12,500 trades in a single day, which is one of the reasons why the clients, guys, for those 210 accounts, you hear me say things like up 33% for the first 9 months of the year. They also did this during COVID, during the banking crisis in 23, and that's why the 5-year track record is 18%. You guys are actually working. That's what I'm here. You're actually working. Now, if you prefer just the dividend growth strategy, that's fine. If you want to be a part of these bargain opportunities, they can help with that too.
Whether it's dividend growers or bargain finds, Jared and Jerry use both fundamental and technical analysis to call the plays. Fundamental analysis leans on industry pros who dig into earnings, balance sheets, and trends. Sounds like a fun job.
We just nerd out on it.
And they publish a consensus price target and their best guess of where a stock should be in the year. So if today's price is below that target, that's the upside, like points still left on the scoreboard, if you will. But if the price has already sprinted past the target, the game's over and the upside's gone. And I'm really sad that we're not playing the analogy sports game this week.
We're just driven with sports analogy.
You'd be winning right now.
Yep.
Technical analysis is more like watching game film.
Now we're talking.
Instead of rosters, you study charts, patterns, and trading volume. It's about spotting momentum. Are we on a hot streak or losing ground? Put simply, fundamentals ask, is this team built to win this season? Technicals ask, what's the momentum right now? And Jared and Jerry mix both to stay ahead.
So if you're talking about nerding out on things, on the investments page of our website, we have something called the Organized Investor Reference Guide. The thing's, 30-something pages long. We used to call it the Excel from Hell spreadsheet, but that's kind of what it is. But it shows basically the price targets, the market prices on different things. It's an in-depth look in terms of the back door about what we do to manage these portfolios. The Market Pulse basically is our own research report that we created. It's has short-term dashboards, also some long-term dashboards and indicators as well. That also is on our website for your viewing pleasure. Plus, we also have some market outlooks on that same Market Pulse report to give you some insight about the next 30, 60, and 90 days out. So here's the bottom line on all of this, okay? Lower advisory fees, fewer hidden costs, and investing in stocks, not mutual funds and ETFs, is why the performance beats the Dow. If your advisor is charging you a fee only to invest that money, say, in 15 or 20 mutual funds or ETFs, they're going to probably deliver you average performance. And you ask, well, what am I paying the fee for?
Yeah, what are we doing here? Also, right there on the investments page of the website is an example of a mutual fund advisory account with a 5-year track record of less than 9%. It's even less once you deduct the advisory fee out of it. Then it's even less. 5-year track net performance for Tennessee Wealth Management is over 18%, which is more than double. So for those of you who are interested in this type of strategy, this should get your attention. The fact that a lot of these large firms, they offer some version of this mutual fund strategy. It's what you're going to see on your client statements.
Another reason to avoid advisory accounts invested in mutual funds and ETFs is because of their hidden financial incentives behind them. On our website is a pay-to-play diagram that shows how major investment firms receive payments from product providers. These payments, often called revenue sharing or cost reimbursement, comes from internal fund expenses you're being charged.
In the example on our website we just mentioned, the internal cost of the funds is 0.79% annually. That means $7,900 per year on $1 million portfolio, some of which may flow back to the firms they recommend those funds from. So firms even admit they won't even offer certain products unless they're paid to do so. And all of this is disclosed actually to their clients, but that doesn't mean many will even read it, much less understand it. I mean, I know I am the world's worst about just signing something and not reading.
But you will check every email.
Exactly.
I do check emails. I didn't say I read them. I just open and glance.
So we've covered what we've done for clients, how we do it, why we did it. Here's what we're offering to do for you, the listener. But before we do that, don't panic, because at some point, we're going to have to chat with you to kind of get you started, to understand your situation, to try to get you started. So just to start with, give me a call. My name is Jerry. That would be me. My phone number is 865, which spells all, 415-2070. That's going to be your first step.
Jerry, you're in my favorites on my phone now. Did you know that?
Really?
Susan's.
Am I on that?
Babe, your call, text, and FaceTime. You're the top 3. Jerry's made the list. Everyone's heard the term BOGO, guys. Buy one, get one free. And thanks to East Tennessee's Financial For, all of us sitting here right now, we got a new phrase. Get one free, get one free, get one free, get one free. That's the get one free to the 4th power. These are 4 of us giving you 4 freebies right now. No strings attached. Nothing attached, actually. Here it is.
The first one is to help you organize your investments, and we're offering to give you a Morningstar Report on your investments. It's usually over 100 pages, but it also will give you a clear, plain English explanation of what it means. You'll realize just how much you might save on advisory fees and mutual fund costs, and how much we may improve your performance and long-term financial future. There's a sample on the investments page of our website.
Of course there is.
That's where everything is.
Yeah, everything. Even Jimmy Hoff is there, I believe.
I think my kids' Christmas list might be on there. All right. So the second is for someone needing help organizing their retirement. We'll prepare a retirement cash flow analysis. We can also prepare one of those for like a Christmas gift if you'd like that, speaking of Christmas. And there's a sample on the retirement page of our website for this. Third, for anyone who's been procrastinating, we can actually help you get your estate planning documents in place through our partnership with an online company called Trust and Will. For someone using a will package of documents, this will be completely free of charge. Now, if you prefer a revocable living trust, your only cost is retitling your property into the name of that trust. And either way, we'll help you to finally get your affairs in order at little or if any cost.
And fourth is to help you expand your Tennessee football collection. So we'll give you a full-size Tennessee football signed by my husband, Erik Ainge. So if you get mad at him on the radio or something, just take the football in the front yard, kick it.
What?
So, guys, those are our 4 get one frees. No cost, no obligation, no catch. And to get the football rolling, so to speak,
Nice.
we'd like to have our conversation rolling, also, so to speak. And we promise it's not going to be as scary as you might think. I mean, if you're worried about Megan, relax. She did teach first grade at CAK, which probably means the scariest thing she ever did was confiscate a box of crackers or crayons or something.
They also work with about 240 families, which is like 750 accounts, and some have been clients for over 40 years. In fact, some of their clients have been with them longer than most cars last. If they weren't dependable, they'd have to trade them in for a newer model years ago. Bottom line, they can analyze what you're doing, but they can't do it without knowing what you're doing.
So here's a baby step idea. Why not start off with calling my dad for his Ask Him Anything in 20 minutes-ish chat. And if you've ever wanted to grill a CFP with 43 years of experience, now is your chance. 20 minutes, no charge, no steak dinner sales pitch, but just a conversation with my dad, Jerry, your questions, and maybe some sports analogies. His number is 415-2070. And yes, it rings straight to his cell phone, so you're welcome.
And if you're nervous about calling, just imagine explaining to your grandkids someday you didn't retire early because you were too scared to pick up the phone. I mean, that's a bedtime story nobody wants to hear. So just remember, we're here to help, not judge. So let us help you.
It's a bedtime nightmare. Again, guys, this is Ainge with my wife, Susan, Megan Hubbard, and Jerry Goodman right there from Tennessee Wealth Management. We're East Tennessee's Financial Four right here on the Organized Investor Show. Stay with us right here on Newstalk 98.7.
Rising high above downtown Knoxville, one landmark shines brighter than the rest, the Sun Sphere. Since 1982, this golden symbol of the World's Fair has defined our skyline. And now, it defines how Knoxville celebrates. Sun Sphere Events invites you to host your next gathering inside Knoxville's most iconic event venue. 2 breathtaking floors of panoramic views set the stage for unforgettable weddings, corporate receptions, and milestone celebrations, all framed by the glow of East Tennessee. From intimate dinners to grand galas, Sun Sphere Events delivers an experience as elevated as its view. And with trusted local partners, including the culinary team from Rosa's Catering, celebrating over 50 years in East Tennessee, your event is in expert hands. Plan your next celebration today at sunsphereevents.com. Sun Sphere Events, Knoxville's most iconic event venue.
At the Grimes Agency with Goosehead Insurance, everything starts with one goal: putting clients first. The team is committed to adding value, providing clarity, and ensuring every client feels confident in their coverage and price. As a true brokerage, the Grimes Agency shops your insurance with over 30 A-rated companies, including Progressive, Farmers, Travelers, Nationwide, Liberty Mutual, and many more, so we can make sure you have great coverage at the most competitive rate. From home, auto, umbrella, and dwelling to life and jewelry insurance, they offer personalized protection for what matters most. With honesty, transparency, and a client-first approach, this is insurance the way you always wished it was done. Call Mike Grimes at 865-281-1267 or visit www.tn.insure to compare real quotes in minutes. The Grimes Agency with Goosehead. Insurance the way you always wished it was done.
Erik Ainge is a host of The Erik Ainge Show on 99.1 The Sports Animal, weekdays from 9 to noon. He is not a client of Tennessee Wealth Management, but is compensated to both promote and co-host the Organized Investor Show.
Welcome back, Knoxville. You are listening to the Organized Investor Show, brought to you by Tennessee Wealth Management. It's me, Ainge, here with Susan Ainge, Megan Hubbard, and Jerry Goodman. I think we should all do a thing where we all say something nice about me, right? What, Jerry, you start us off. What's something nice about Eric?
I'm thinking, can we start off with something easy?
Babe, you got anything nice? Like, well, how great am I?
Wonderful.
Oh, that didn't
The most
sound...
wonderful one in there.
I know you believe that. All right, guys, you can check.
I know. You don't
Oh,
sweat,
you got one?
You don't sweat much for a tall guy.
Even that's a lie. I'm probably sweating right now. You guys, if you missed it, you can check it out, and you actually can check out the entire show and other episodes of what we're doing right here, the Organized Investor Show. On this station, I've teamed up with 3 team members from Tennessee Wealth Management. We refer to ourselves as East Tennessee's Financial Four. Megan Hubbard, Megan's dad, Jerry Goodman, and my wife, Susan Ainge, and me. We're all right here, which apparently Jerry is lying about saying something nice about me. But guys, if you like the show or you want to learn more, you can listen to the entire show and other episodes on the website, theorganizedinvestor.com.
If you've just tuned in, we've been talking about how to get your investments, your retirement, and yes, even your affairs organized. And no, not the kind of affairs that end up on reality TV. Now, if you've already heard this in the first segment, buckle up. You need to hear it again. Think of it like watching the same highlight reel twice. The plays are so good, they deserve a replay. We kick things off by doing something your advisor has probably never, ever, ever done, actually showing you how much we've improved the financial lives of our clients. Crazy idea, right? Sharing results instead of just handing out steak dinner invitations.
All right, so let's do a scoreboard check. As of September 30th, 2025, the 210 accounts we manage are averaging a net return of 33.2% for the year. That is 3.5 times higher than the Dow Jones. Translation, if the Dow Jones is jogging, we are running laps around it while carrying the water cooler.
Sports analogy, Megan. You get $1 for that one. So for the trailing 1 year, we're at 29.8% versus the Dow at 9.6%. And that's just not beating the market. That's actually dunking it.
Can you dunk, Jerry?
No, but I've seen people do it.
You can dunk financially.
3-year average, 22.3%. 5 years, 18.3%, which is probably double what most mutual fund advisory programs are putting up as far as a track record is concerned.
No, I got a good one. In other words, if mutual funds were a football team, they'd be on the JV team.
Yes.
Right? And for that
that's junior varsity, right?
Yeah, junior varsity, yeah. And for like a 6 3/4 of a year track record, you guys are at 17.1% annually. That's consistency. It's like a kicker that never misses, except we're not talking about kicking field goals. We're talking about millions of dollars instead of field goals. And just so you know, these are net returns after all fees and costs. No smoke, no mirrors, no hidden stake dinner charges. And yes, they're posted in black and white right there online, guys, theorganizedinvestor.com, because they're brave enough to actually show you their homework.
Obviously, past performance is no guarantee of future results, and returns can vary depending on the investment objective and tolerance for risk for each investor. That's what we've done. So how do we do it? Well, it's not magic, it's method. Improving performance by just 2% on $1 million portfolio can mean $20,000 per year, or $400,000 more over 20 years.
So the 2% improvement usually comes from 3 things: lower fees, lower costs, and better performance. And in terms of lower advisory fees, many advisors are charging an advisory fee that is probably about 0.25% higher than what we charge. Now, that may not seem like much, but for $1 million account, that's a savings of $2,500 per year, or $50,000 over 20 years. In terms of avoiding costs, many advisors put clients into 15 to 20 mutual funds, ETFs, alternatives, maybe annuities, and all of those may have internal costs buried inside of them, sometimes 1% or more.
So we try to avoid these different types of funds, and in the process, hope to save about 1% in terms of these fees and costs that are buried inside of this. We also try to squeeze out at least another 1% in terms of performance by simply being more choosy about where we put the money, okay? Here's a little analogy. Think of us as being picky eaters on the old investment buffet. There's one for you.
You're a foodie.
Exactly. But here's the deal. If your advisor has you in 15 to 20 different types of funds, whatever they are, each owning hundreds of stocks, you basically are invested in thousands of companies. Do you realize that? So congratulations. You now own every stock on the planet, folks.
And that doesn't make you diversified. That's like, you always hear that investment diversification. That doesn't make you diversified. Doing it that way makes you average. It's like ordering one of everything on the menu and realizing it all tastes like cafeteria food. We call that diversification around here, and it drags down your results. We call that performance. Why do we make up words here? Well, because Jerry tells us to. Also because Wall Street jargon is boring. And so we're going to have some fun with it. Owning thousands of companies means you've got some winners. It also means you've got plenty of losers riding along. It's like drafting the entire college football team to be on your NFL roster. You got some NFL MVPs. You also have the guys that don't even know how to put their socks on.
So we stick with individual stocks. No hidden costs, full transparency, and better tax control. Simple as that. Our core lineup: household names like Costco, Walmart, Home Depot, Lowe's, and even Smucker's. Lowe's has raised its dividend for over 60 straight years. Talk about consistency. These picks come from Wells Fargo's DSIP list, which has averaged about 12% annually over 30 years. Details are on our website if you want to nerd out. Because these companies are so well managed, they tend to hold up better in downturns. That sets us up perfectly for our second play: bargain opportunities.
And a bargain opportunity is when the market freaks out, like COVID or the 2023 banking mess or the 2025 tariff scare that we just had back in the spring. We swoop in and we buy quality stocks on sale. So in spring of 2025, we made 12,500 trades in one day. The result? Well, clients gained over 33% in just 9 months. And if you like the steady dividend growth strategy, great. If you want in on the bargain opportunities, we will be here to help you with that too. Either way, you are covered.
So we manage these accounts for a flat fee, which is usually going to be less than what your advisor is charging you. And no matter how many trades, there's no extra cost to do that, okay? The stocks, they're simple, it's transparent, and that's a big reason why our performance is beating the Dow. Meanwhile, a lot of advisors are just going to stick their clients in 15 or 20 mutual funds, ETFs, things like this. They're all layered in fees, and they're delivering what? Average performance. See, one example on our site shows a 5-year return of 9%. We spoke about this in the earlier segment.
I said that.
Yeah, and that's before the fees are even taken out. Our 5-year performance, by comparison, is at 18%. It's a mere double that. Did that get your attention?
It has mine. And here's the kicker. Those mutual fund accounts often have internal costs the investors don't even know about. Like, you're like, what's that? What's that? You don't even know.
Well, they know now.
Well, we're trying to help you know, right? And some examples, like the one you just mentioned, the cost is like 0.79% a year. On $1 million account, $7,900. That's a lot of money, especially if you're not paying attention year after year. And oh, by the way, many firms pocket those payments from the product providers. We call it pay to play. Again, example where, guys?
The website of the...
On the website, theorganizedinvestor.com.
All right, it's time for our 4 for free special. No cost, no catch, just 4 things to help you out. First, for your investments, a full Morningstar Report on your portfolio, 100 plus pages, and we'll translate it into a plain English so you don't need a decoder ring. Second, for retirement, a cash flow analysis so you can plan with confidence instead of guesswork.
And third, for estate planning, we have a free online document through our partner Trust and Will. And if things are more complicated, we know local attorneys who'll do it for a flat fee that won't make you faint. So, the fourth freebie, just for fun, a full-sized, not to be confused with the miniature, a full-size Tennessee football signed by Erick.
Hey!
Complete with a stand. So
Me.
it doesn't roll off your desk and go hide somewhere.
Do they have medium-sized ones, too? It's small and large.
I
Big,
guess.
medium?
Where's this football going to hide, though? Like,
It'll roll under something.
I always have some in my truck.
Yeah.
So that's the Reader's Digest version of what you've missed. For the full show, you can check out the podcast page on our website or just search The Organized Investor wherever you get podcasts, and they should show up.
So once again, step 1, if you need to dive in, give me a call. This is Jerry. That would be me. Phone number is Vol, V-O-L. It's 865-415-2070. And for my Ask Me Anything in 20 Minutes chat, they say I can't cover it in 20 minutes, but I'll give it a try. So it's quick, it's easy, and yes, you can really ask me anything on your mind. So here's a question. Are you worried that you don't know us? Well, that's okay. We don't know you either. But one little phone call can fix all of that. Well, look, we work with 240 households, about 750 accounts. Some of these go back for 4 decades. So relax. We're not here to judge you. We're just here to help you. And if you're really scared to call me, that's a real shame, because just hiding under the bed with your statements, go ahead and do that if you want to, but we'll still be here when you finally crawl out.
The thought of somebody hiding under the bed with their statements, the visual of that is really good.
All right, and you guys get a lot of questions about how you actually manage the investments, right? And this is why it's been explained, the fundamental and technical research that you guys use on these types of numbers. So you can see some of the information that they have access to. They personally created a summary and they named it the Market Pulse. And it's posted on the investments page on the website. It covers technical analysis as they, divided up the summary into short-term indicators and long-term. The short-term dashboard includes several things such as price trend, momentum, market breadth, volume, and sentiment. The long-term dashboard covers 14 different indicators that help determine the level of risk in the market. Market Pulse also has some market outlooks for the next 30, 60, and 90-day periods.
The reality is everyone has access to the same information, and how you choose to use it is very important. For example, everyone watched the market tank during COVID back in 2020. Most advisors left their clients in the same 15 to 20 mutual funds or exchange-traded funds they had been in for the last year and did nothing to take advantage of the opportunity.
Lazy.
More than likely, they made very few changes to anything in their accounts during that whole COVID time period.
Lazy.
Losers.
The fact that advisors have clients invested in 15 to 20 mutual funds or exchange-traded funds means they don't really even know what the underlying investments are. Now, being over-diversified in 15 to 20 funds means you probably own several thousand companies, which, again, we refer to as
dun, dun, dun.
Diversification. You're getting a mathematical average of all those returns, which is just average, and what we refer to as
dun, dun, dun.
That's the wrong sound effect, but there we go. Performance. Oh, man. Okay, so in contrast, common stocks are 100% transparent because our clients can see them on their statements and they know what they own.
So when you're buried in mutual funds or ETFs, you really can't chase bargains the same way you can with individual common stocks. If one slice of the fund barely drops while another gets crashed and burned, you can't just switch them out. You're stuck with whatever the fund manager happens to have picked out. So you got three choices: buy more, sell it all, or just maybe hang tight and keep what you got. So we take a different approach on this, and we manage these accounts on the security level, not on the fund level. And that flexibility, it gives us the ability to move when opportunity knocks. And sometimes these funds and ETFs, simply, they just can't do that.
That's why they focus on the dividend growth stocks from the DSIP list. Again, these names, you're going to get tired of hearing them, but I'm never tired of going to them, and that's, I think, why they're so good. Home Depot, Costco, Walmart, Smucker's Jelly. And sure, they can dip too, but not nearly as much as the airlines or cruise lines did back in 2020. And back then, the obvious question, why keep the entire position in Smucker's Jelly? They're down 5%. When you could have swooped in on travel and on hospitality stocks, they were down 50 to 75%. So they had a discussion with clients about this bargain opportunity and explained the plan, which was moving a portion of the account from the DSIP stocks into COVID-affected stocks. And that includes bargain areas like travel, hospitality. When your advisor's being lazy and not seeing this, Tennessee Wealth Management, Jared and Jerry are sitting around waiting, probably not even sleeping.
Yeah.
Clients ended up with portfolios split between the DSIP stocks and the discounted names like Cheesecake Factory, American Airlines, Disney, and Royal Caribbean, just to name a few. The end result was having about 49 DSIP stocks and 49 COVID stocks with about 1% in each one. We were so diversified that even if a couple of companies had gone bust, but none did, the math was too good to ignore, and it paid off in a really big way.
So when you fast forward 18 months, we were then informing the CPAs for some of our clients just how much the gains were going to be on their 2021 tax returns, which is a nice problem to have. As you might imagine, these bargain opportunities can be very profitable. So after COVID came the banking crisis in 2023, when we acquired about 13 regional bank stocks for a relatively small portion of the account. Here's another example of where most advisors just left their clients invested in 15 to 20 funds because there's just not a way to even know what are in those funds at any point in time.
And next came the tariff scare back in the spring of this year, 2025, which basically has turned out to be a huge home run. So once again, most advisors keep their clients in the same 15 or 20 funds because they're so over-diversified. They don't know what's even in these investments. They don't even know what their clients are invested in. So now, in case you're wondering, we didn't learn all of this from a textbook, how to do this. We learned this by watching the markets, spotting opportunities, and being able to move money from what has dropped a little into what's probably dropped a lot. Again, we've organized our clients on a security level. We manage them that way, and not with 15 or 20 funds that so over-diversifies your money that you have it in thousands of different things. We scrutinize and handpick every security based upon the fundamentals of that stock. And being more selective with our investment choices is why our 5-year performance is over 18% a year.
So, moving some money from Smucker's to American Airlines in the spring of 2020 is just one example of a trade that made perfect sense. Now, they don't expect to catch the exact bottom or top, but they're patient, ready, and waiting for the next opportunity to show up. The information they include in our Market Pulse report is just part of the many tools they use to manage these accounts. And again, it's on the investments page of their website if you'd like to get some short and long-term insight about what's going on in the market.
This is Erik Ainge, along with my wife, Susan Ainge, Megan Hubbard, and Jerry Goodman from Tennessee Wealth Management. We are East Tennessee's Financial Four, and this is the Organized Investor Show. If you want to get in the pool on the shallow end and just take a little dip, you can make a call to Jerry, ask him anything in 20 minutes, investments, retirement, estate planning, even why your fantasy football team stinks. He'll probably patch me on that part of that phone call, though. I can promise you that. Again, his number, 415-2070, 865-415-2070. Go straight to his cell phone. You can mess with him. I do it all the time. Sometimes I just call him to ask him what he's doing, and he's usually doing the same thing, probably waiting on the next bargain opportunity. Stay with us. We got more to cover right here on Newstalk 98.7.
For more than 50 years, families, businesses, and neighbors have trusted one name to make life's biggest moments unforgettable. Rosa's Catering. Family owned, locally grown, serving this community since 1971. And now, Rosa's is taking hospitality to new heights. Literally, inside the iconic Sunsphere, Knoxville's shining symbol from the 1982 World's Fair. Introducing Sunsphere Events. 2 breathtaking floors of panoramic views, elegant gatherings, and the warmth only Rosa's can provide. Whether it's a wedding in the sky, a corporate reception, or a celebration with friends, Rosa's and Sunsphere events bring people together beautifully. Visit rosescatering.com or sunsphereevents.com to plan your next unforgettable event. Roses Catering, a Knoxville tradition since 1971.
At the Grimes Agency with Goosehead Insurance, getting a quote has never been easier. With our industry-leading online quoting tool, you can answer a few simple questions and see real-time quotes from over 30 A-rated insurance companies right on your screen or phone, often in less than 30 seconds. The entire process takes about 5 minutes, giving you instant access to real prices so you can make sure you're getting the most competitive option for your home and auto insurance. Your information is never shared, sold, or sent to third parties. Everything goes directly to the local Goosehead Insurance office where Mike Grimes and his team review your results, run your reports, and confirm your final quote when you're ready. Call Mike Grimes at 865-281-1267 or visit www.tn.insure today to experience the future of insurance shopping. The Grimes Agency with Goosehead Insurance. Insurance the way you always wished it was done.
Erik Ainge is the host of The Erik Ainge Show on 99.1 The Sports Animal, weekdays from 9 to noon. He is not a client of Tennessee Wealth Management, but is compensated to both promote and co-host the Organized Investor Show.
Welcome back to the Organized Investor Show. I'm Ainge right here, former quarterback and sports animal host. Again, my three teammates for this, though, from Tennessee Wealth Management, Megan Hubbard, her dad, Jerry Goodman, and my wife, Susan Ainge. Together, we call ourselves East Tennessee's Financial Four, giving you your financial forecast. Last time we came back from break, I made you guys all say something nice about me. Now it's my turn, right? It's that time of year. Susan Ainge, you are beautiful, and you have the heart of gold, and you are the most amazing mommy ever. Megan, you are so patient with your dad. So patient. You deserve some sort of award for that. Jerry is low-key becoming one of my favorite people, period. I don't know how to even quantify your awesomeness, so I'm not going to.
It's on a different scale, isn't it?
It's just it's a different level. It's more than 2%, I'll tell you what. But that's what we're talking about here. 2% on $1 million portfolio, guys, being able to improve that overall performance by 2%. That's $20,000 a year. That's $400,000 over a 20-year period. This is how we've been able to materially improve the financial lives of their clients right there. 210 accounts right now managing. And for the first 9 months of 2025, that net rate return number is 33.2%, nearly 30% over the past 12 months, over 18% over the last 5 years. Ballin'.
And remember, those are net numbers after all fees and costs. No smoke, no mirrors, just results posted in black and white on our website, theorganizedinvestor.com. Just remember, though, past performance is not a guarantee of future success, and the rates of return will vary for each investor based upon their individual investment objectives and tolerance for risk.
Don't be a wimp.
We explained how those results come from three simple but powerful plays: lower advisory fees, avoiding hidden costs buried in mutual funds and ETFs, and squeezing out extra performance by being choosy with individual stocks. So instead of diversification, which is owning thousands of companies and ending up average, we stick with quality names like Costco, Walmart, Home Depot, Lowe's, and Smucker's. And these types of companies have a history of raising their dividends and have a track record of consistency. So they also give us transparency and tax control that fund investors, they just don't get.
So next we talked about the second big strategy, which is bargain opportunities. Eric, you're supposed to ring the bell. Okay. Speak up next time. So when the market panics, like COVID in 2020, banking crisis 2023.
Oh, my goodness.
Tariff scares in 2025. We don't just freeze, do we, Eric? No. We move money from what has dipped a little bit into what has dropped a lot, scooping up these really great companies, sometimes at fire sale prices. So this is how clients have seen the gains like 33% this year for the first 9 months of this year. After we made 12,500 trades in a really fun day, we did all that in one particular day back in the spring. And this is not about trying to catch the exact bottom. We're not going to do that. We're not going to ever catch the exact top. But it's about being ready, being patient, and being decisive when opportunity actually shows up and knocks on the door.
We're also highlighting how our approach here differs from the typical advisor who leaves clients invested in 15 to 20 mutual funds, layering on fees and delivering average returns. When you're stuck inside mutual funds or ETFs, bargain hunting, ring, 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 it's like trying to order a la carte at a buffet. You just can't do it. One part of the fund might barely dip while another crashes, but you can't swap the pieces out. You're stuck with whatever the fund manager served up. not good. It's average. You don't want it. Buy more, sell it all, sit tight. You guys are doing things differently. Managing at the security level, not the fund level. Gives you the flexibility to move when opportunity knocks. Something funds and ETFs simply can't do.
That's why our core holdings are dividend growth stocks from the DSIP list. Familiar names like Home Depot, Costco, Walmart, even Smucker's Jelly. Sure, they can dip too, but not nearly as much as airlines or cruise lines did back in 2020. So our clients ended up with a blended portfolio. The end result was having about 49 DSIP stocks and 49 COVID stocks with about 1% in each one.
We have an example of a mutual fund advisory account on our website with a 5-year track record of under 9%, and that was before a fee was actually deducted. That's less than half of our net 18% over the same period. That's the difference between jogging with the rest of the pack and sprinting ahead with the water cooler on your back.
And finally, we offered what we call the 4 for free special. We love this one.
Another term on 4.
Exactly. A full Morningstar report translated in plain English so you can actually understand what it means. A retirement cash flow analysis, which a lot of people don't need this, but some do. We're going to give you free estate planning documents through an online relationship we have with a company called Trust and Will. And just for fun, a full-size Tennessee football signed by who?
Yeah,
Erik
I mean,
Ainge.
sure. Oh, you guys can make them a ton of money. You get a football.
Exactly. So that's the highlighted reel from the last segment. Lower fees, smarter stock selection, bargain opportunities, bargain hunting. Erick, ring the bell. And when the market panics, and we have a few freebies also to help get you organized.
So let's keep rolling and build on that foundation, brick by brick. Oh, don't do that. That's Butch Jones. Estate planning isn't exactly cocktail party conversation, but it's one of the most important things you can do for your family. Without the right documents, you're basically leaving them a giant mess. Banks won't release funds, doctors won't know who's in charge, and loved ones are left guessing. You can picture this. A family member has a stroke and suddenly can't sign their name on a tax return. Taking money from their retirement account or sign the deed if the house needs to be sold. If the paperwork isn't ready, you're stuck on the sidelines with no playbook and your hands are tied.
That's why we decided to make it easy. We purchased estate planning packages from our online partner, Trust and Will, for our clients, and now we're offering them to our listeners completely free of charge. Normally, these documents could cost you hundreds of dollars, but we've covered that. For the vast majority of people, this solution is more than enough to protect your family and keep life simple. If your situation is more complicated, we also work with local attorneys who can help for a very reasonable flat fee.
By comparison, we often see attorneys and even document preparation companies charging thousands of dollars for documents that may be no more effective than what we're offering here. Now, if you're wondering whether we're qualified to help, here's the reminder. We've conducted over 100 estate planning workshops over the years, so that definitely has given us some experience. My dad wrote the Widow's Digest 25 years ago, and it's on the website if you want to see it. Great read. We're also very knowledgeable, experienced, and we're willing to help anyone, and we do it completely free of charge. Now, if you think nobody works for free, well, you're entitled to your opinion, but my dad is passionate about trying to help people, and this goes back to that do a good deed a day mantra from his time as a Boy Scout.
So while we're barking out suggestions, don't miss podcast 23, where we actually break down the pros and cons of a revocable living trust. Sounds pretty riveting, but a trust versus using a single will package. There's lots of information out there, and trusts are often recommended to everybody simply because they're the most expensive option to start to fix things, okay? We've never received a dime of compensation from anybody helping them with their estate planning documents. So you can count on us to give you a clear, unbiased summary of what needs to go on, okay? We have zero agenda when it comes to somebody's addressing their estate planning situation.
So if you've been putting this off because you didn't want to spend hundreds or maybe even thousands of dollars, you no longer have that excuse. Think of it this way. Estate planning is like putting in the corner pieces of a puzzle. Once they're in place, the whole picture, voila, it makes sense. And we realize just how heavy that smartphone is, guys. It's a true backbreaker. Sometimes I get text neck, though. That is an actual thing. But it's seriously time to pick up the phone and call, email, text, send carrier pigeon, just swing by. Fact is, you can't get the help from Jerry and Jared and Megan and Susie, Amber, the whole team at Tennessee Wealth Management if you don't at least reach out. Make sure those corner puzzle pieces are put up there and your family's not the one left scrambling.
All right, babe, passionate leader, sports analogy time. We're talking about investments and advisors and portfolios. In football, coaches get fired all the time. What's the number one reason a coach gets fired?
Ooh, fired football coaches. That's maybe my favorite, but it's all about performance. You can have the best pep talks and the nicest playbook and cool uniforms, but you are what your record says you are. In football, you are what your record says you are in money, right? That's what it is.
So exactly. And here's the funny part. When it comes to sports, it seems like they'll fire a coach in a heartbeat. But when it comes to money, a lot of people hang on to their financial coach forever, even when their returns are mediocre.
Well, you're firing coaches a lot of the times out of emotion, but what's more emotional? Do you actually know your returns, right? Like if you actually knew what you're missing out on, maybe that'd get you emotional too. And yeah, in the SEC, if you're not winning, your fans are storming the field. They're booing. They're mad. They're lighting things on fire, lighting mattresses on fire. But with financial advisors, folks act like they're married to them. He's been here for years. He's a nice guy and all that. That might be fine. But what are you missing out on? Tired of losing?
Well, here's the real kicker. Most investors, as Eric just mentioned this, they don't even know what their track record is. Studies show that like half the people don't even know their 5-year performance record. So, if that's like a fan that maybe never checks the scoreboard, so you just assume the team's doing well because the band keeps playing at halftime.
Hey, well, I'm guilty of that too. Before I met you guys, I couldn't tell you what I made over the last 5 years. I just hoped it was better than a field goal percentage, right? Spoiler alert, it wasn't. That's why we do these shows. It's people like me, people like you listening. And advisors rarely tell you what the performance is. But Tennessee Wealth Management will. The Organized Investor Show is to challenge that. We covered it earlier, but guys, during the first 9 months of 2025, the 210 accounts they managed averaged a net return of 33.2%. I'm certain mine's nowhere near that for the last 9 months.
That's like watching your team score 4 touchdowns while mine barely gets a safety. If this were football, most financial coaches would have been benched years ago, and the fans would have been throwing nachos from the stands.
Mustard bottles.
So here's my first question for you. What's your 5-year track record on your investments? Some questions are rhetorical, but this one actually is not. This is an actual question. You can go find the answer to this. If you don't know, grab your statements, hop online, or call your advisor. Heck, call us if you have to. We'll help you figure it out. You just need to do something.
So let's just take an assumption. Let's say your 5-year performance is 9%, okay? That's kind of generous, but just go with 9% for now. Now, compare that to our 5-year performance, which is basically slightly over 18%. Folks, that's more than double, which leads you to the next question. If performance is the reason why a lot of coaches get fired, the number one reason, let's say, why are you still sticking with a financial coach that's only delivering, let's say, average results to your scoreboard?
Well, and a lot of people say, oh, my advisor, I play golf with him. My advisor, he's a super nice guy. This isn't a personality contest, guys. This is your financial future, financial freedom, long-term, changing your financial future. If you don't know your 5-year record, that's problem number one. If you do know it, but don't know what to compare it against, that's problem number 2. It's like bragging about scoring 20 points, realizing the other team put up 80. Fans would not stand for that. They'd be booing, storming the field, and demanding a new coach.
And here's another kicker. Many of you are already in the 3rd or 4th quarter of building your retirement nest egg. The clock is ticking, and unlike football, retirement planning doesn't come with timeouts or a 2-minute warning.
So as a former teacher, here's your homework. I want you to think about whether or not you know your 5-year track record. Maybe come up with a number, keep it in your head. Then go home, pull out your statements, see if you have that on your statement, and does it match what you think it is? Now, if you don't know what your track record is, you have no idea even to what to guess, that right there is probably your first red flag, okay? And if you do know what it is, you're going to be able to compare that to the market or compare it to us. Now, if your coach isn't keeping you in the game, maybe it's time to call a timeout and consider a new play.
If it sounds like we're harping on you, it's because we are. We're out here knocking on your door, trying to get your attention. We have a lot of people answering the door, but there's a lot more out there that need to. That's another reason why we do this show and why we post our performance on our website. No smoke, no mirrors, no hidden steak dinner charges, just the scoreboard. And if your advisor isn't showing you theirs, maybe it's time to ask why.
Let's wrap up with one more story that always puts a smile on our face. So we have been blessed with a lot of multi-generational clients, starting with their parents, then their kids, and sometimes even their grandkids. And our longest relationship actually goes all the way back to 1982. This was just a year after I was born. This is when my dad worked with his client's father, this particular client, and his daughter, who's now about 70, still works with us today. And Dad actually told her she is not allowed to either die or fire us because she holds the record for the longest history of clienthood.
It goes back a long time. So, and then we have a story about Howard and Colleen. And folks, we usually change the name, but that's actually these people's name. I didn't give you the last name. But they came to us through their parents about 15 years ago. They're both retired. and we've helped them grow their nest egg very well. Their number one goal, they wanted to move to Las Vegas where their son works in the entertainment industry, and it's their only son, and they wanted to be near him and their family. Well, the dream just came true. They bought a house outside of Las Vegas, made the move, along with their 9 dogs. Yes, folks, 9 dogs. They moved from Arkansas to Las Vegas. 3 of them rode in the car with Howard and Colleen. The other 3 got to go in a big professional transport van. This is a great couple. They actually love their dogs almost much as they love their family. It's amazing. She used to be a dog trainer. Helping people reach goals like this, like whether it's retiring comfortably or moving closer to their family, this is what it's really all about. This is what's the best part of our job. And selfishly, I now have another reason to visit Las Vegas because they promised they're going to give me the royal treatment when I show up out there.
That's it for today, guys. Thank you for listening. You can follow on social media what you heard today. If you don't know what your track record is, it's time to find out. Oh, and there's this place called Tennessee Wealth Management that's ready to help you. All you got to do is call or text Jerry at 865-415-2070. Again, me, Erik Ainge, my wife, Susan Ainge, Megan Hubbard, and Jerry Goodman from Tennessee Wealth Management, your financial force. Join us next week right here on the Organized Investor Show on Newstalk 98.7.
The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of the Organized Investor or Tennessee Wealth Management. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional investing advice. Erik Ainge is a host of the Erik Ainge Show on 99.1 The Sports Animal, weekdays from 9 to noon. He is not a client of Tennessee Wealth Management, but is compensated to both promote and co-host the Organized Investor Show. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning or before making any investment decision. And please consult legal or tax professionals for specific information regarding your individual situation. Brokerage and advisory services are provided by Tennessee Wealth Management through Prospera Financial Services Incorporated. Member FINRA SIPC. The Organized Investor is a brand name operated by Tennessee Wealth Management for educational platform purposes.
At the Grimes Agency with Goosehead Insurance, everything starts with one goal: putting clients first. The team is committed to adding value, providing clarity, and ensuring every client feels confident in their coverage and price. As a true brokerage, the Grimes Agency shops your insurance with over 30 A-rated companies, including Progressive, Farmers, Travelers, Nationwide, Liberty Mutual, and many more, so we can make sure you have great coverage at the most competitive rate. From home, auto, umbrella, and dwelling to life and jewelry insurance, they offer personalized protection for what matters most. With honesty, transparency, and a client-first approach, this is insurance the way you always wished it was done. Call Mike Grimes at 865-281-1267 or visit www.tn.insure to compare real quotes in minutes. The Grimes Agency with Goosehead. Insurance the way you always wished it was done.
Rising high above downtown Knoxville, one landmark shines brighter than the rest: the Sun Sphere. Since 1982, this golden symbol of the World's Fair has defined our skyline. And now, it defines how Knoxville celebrates. Sun Sphere Events invites you to host your next gathering inside Knoxville's most iconic event venue. 2 breathtaking floors of panoramic views set the stage for unforgettable weddings, corporate receptions, and milestone celebrations, all framed by the glow of East Tennessee. From intimate dinners to grand galas, Sun Sphere Events delivers an experience as elevated as its view. And with trusted local partners, including the culinary team from Rosa's Catering, celebrating over 50 years in East Tennessee, your event is in expert hands. Plan your next celebration today at sunsphereevents.com. Sun Sphere Events, Knoxville's most iconic event venue.